Hello. Is there anybody out there? What's up, Bill? What's up, Rich? Eddie? TJ? What's up, Eddie? Other Eddie? Joanna? Jerry? Jim? Good afternoon, Ralph and Hadley and Sharir. What's up, Dave? Roble? Michael? What's up, Ryan and Aaron? Yo-Yo? Hello, Christian? Feeling bullish in the house. What's up, Tom? Tom K. Good morning. Did you say good morning? I don't know where you are. All right. Let's jump in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRECIPIC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is the exact same as it was yesterday. I traded every one of these names today. Lots and lots of times. All right. Intel bucking the trend in the semiconductor space like usual. Intel loves to disappoint, doesn't it? Let's see here. Intel sees Q1 adjusted revenue. That's a solid miss. It's a solid miss. 12.2 billion to 13.2 billion versus an estimate of 14.25 billion. It's a solid miss. Intel sees Q1 revenue. That's also a... Wait, those are the same numbers. Oh, adjusted revenue, same thing. They love to disappoint here. They reported 54 cents versus estimates of 44 cents. So they beat on EPS, they beat on revenue, but it's the guidance. The guidance is a solid miss. Intel, not great. What's WDC doing? WDC's down here a bit on this report. The report looks good to me, though. It's been a big move into it. Sometimes we see that decent reports get sold after they've had really big moves into it. The Western Digital second quarter net revenue basically in line, beats very small. Operating expenses do come in hot. What did I see that I liked about this? Oh, their guidance for revenue is a beat, and their expected Q3 adjusted gross margin is a big beat. That's a number that I would think that the market would like more. Not sure what the market doesn't like about this, again, except it's up a lot. And the operating expenses are coming in a little bit hot. But that gross margin number is solid. We have Visa reporting. Visa all over the place. I feel like Visa always seems like a really important name, and that's because it is. It's one of the biggest names that's out there from a market cap perspective, and I think that people forget that sometimes. So it has a big influence on the indexes, not to mention you can get a view into what the consumer is doing. But from a trading perspective, I always find that Visa trades pretty boring on its earnings numbers. But they small beat on net rev, beat on EPS. Total Visa processed transactions, 57.5 billion versus estimates of 57.77 billion. So small miss. Okay. All right, so that's kind of where we're at. Let's see what's going on with the market. What did we do today? So we got the SPYs up 0.5%, though they gave an inside day. We have the Qs down very small. They did not give an inside day. And the IWM up 0.9%, which also gave an inside day. I want to start with the big picture, then we can take a look at the small picture. The small picture was tricky. So, again, inside day for the SPYs, which have still been extended. So it's just another technically bullish consolidation day. And the internals of that inside candle are bullish, that we rounded up and closed well, so you're left with a little bit of a downside tail. ever overread the internals on an inside bar. An inside bar is an inside bar. But, decently bullish, continuing to time correct, allows these moving averages to catch up a little bit further. I think this morning we were gapping up above, per Pat's note, the daily chart Bollinger Band for the ES futures. So we'll probably be back below that now. Helps to satisfy some of the extension, helps to satisfy short-term tactical. So another bullish inside day, but we still are moderately extended. So we're at, let's just call it 488 right now. The 80 MA is 482 and change. So we've got, $5 plus of extension here, which still keeps these SPYs somewhat in no man's land. The 80 MA will be a little bit higher tomorrow morning. So we might just barely be coming out of it. But overall here, the SPYs are still looking fantastic, to be totally honest. The Qs had some relative weakness today. Part of that seemed like it came from Apple with the news. I was surprised with that Apple news, and maybe the market was already expecting it more than I realized. But the App Store, the Europe version of it, I guess they're cutting costs in half based on European regulations. That helped give a quick boost to stocks like Roblox or stocks like Match. I think we spent some time in just yesterday's afternoon meeting talking about how Apple is able to make money even after you've already downloaded the app off the App Store, and then you're buying something, you're actually still paying Apple, which is kind of crazy, and the EU is trying to pull back on that. So you saw a boost come in on your Robloxes of the world, basically anything that has an app or whatever where you will make in-app purchases, where a percentage of that traditionally goes to Apple. Well, now a percentage of that is going to be it still will go to Apple, but it'll be a little bit less, and these other companies will benefit. So you saw Roblox uptick on that. I honestly would have expected Apple to sell off even more, and that helped to hit the Qs down a little bit today, in conjunction with that auction that came out at 1 o'clock, which bid up the TLT, which helped the IWM, which I don't think hurts the Qs, but it doesn't really help the Qs, I don't think, at this point either. So mainly Apple, I think, is the reason why the Qs did not have an inside day. And again, seeing Apple off 0.05%, that news seems to me like it's somewhat significant, especially if there's any chance that other countries adopt similar regulation. If the United States start doing something similar, that'll be even better for your Robloxes of the world, and even worse for Apple itself. And Apple, obviously, such a large market cap that it has a disproportionate impact on the S&P and the NASDAQ. So I'm actually surprised Apple didn't sell off a little bit more on that, which would have made the Qs even weaker. But they held in just fine. So it's a combo time price correction here for the Qs. The Qs are most extended, so them pulling back and showing the most amount of relative weakness, whether it's because of Apple news or otherwise, is not a bad thing at all, especially if you are seeing bullish rotation go into the IWM names of the world. But as of the close here, the Qs are at about 425, ADMA is about 420. So $5 of extension or so in the Qs is, not a terrible amount, but still enough where you could price correct further. Interestingly enough, it's the least amount of extension we've seen in the Qs since a week ago, since basically last Friday morning. So Qs price and time correcting a little bit. And the IWM also gave an inside day. That's definitely productive. So going back to the morning meeting today, what I talked about in the morning meeting was the technicals in the market for today were not set up to give us continuation. But the 8:30 number that came out, or numbers that came out this morning, seemed very Goldilocks to me, where you have the unemployment numbers ticking a little bit higher than expectations. That's something that the Fed wants to see. That's something we want to see for inflation to potentially come down. Yet GDP coming in really strong. It almost seemed like the right numbers hit to continue to bring inflation down, and the right numbers hit to continue to have the economy stay strong. So I thought that was really solid event at 8:30. The market obviously agreed with me. We had a big uptick. The TLT moved higher. The IWM led that uptick early on this morning. And then I was trying to justify in the morning meeting today the fact that the technicals were really not set up for continuation today, with the fact that I felt that that news was so good. So at the end of the day here, I feel like they kind of just outweighed each other, and that's why we were left with more of an inside day, right? Like coming into today, after the SPY candle yesterday, it wasn't quite a push through failure, but we sold off on highs, closed on lows. It seemed like we were setting up for more price correction. The Qs gave a little bit of a shooting star type of candle in extreme extension. They seemed like they were set up for more price correction. And the IWM was concerning me as of yesterday's close, because for the second day in a row, it gapped up to that 198.50 resistance, but totally failed off of it, totally closed on lows as a negative Maribozu candle, which oftentimes will signal that this needs some downside continuation as well. Maybe you get a retest of 192, which was a previous level, and they try to hold 192 as a new support zone to create a higher low. That almost seemed like the most bull case scenario I could come up with in the IWM, again, prior to that 830 number hitting. But then that number hits, we get this nice uptick in the TLT, which didn't manage to close above 94. Got a nice uptick in the TLT into that $94 area, so TLT was positive. Interest rates are down. We know that that helps to especially boost the IWM higher. I kind of felt like it wasn't enough to really be able to get the IWM to break out through 198.50, because even with that uptick to $94, I felt that the TLT really needed to get above yesterday's high. And that would be a positive technical signal for the TLT. And then I think that the interest rate move at that point would become big enough that it could really maybe boost this IWM up to 198.50. So the biggest thing I wanted to see this morning, it was like, all right, the market's gapping up now, and it's gapping up for a reason. We just had some pretty good numbers come out, but is that going to be enough to negate these technicals that are looking very short term, by the way, bearish? You can't look at the technicals and the SPYs and the Qs and make an argument that these are bearish out of anything more than a little price correction off of the extension and pullback that we saw from yesterday. But that's how markets work, right? That's how trends work. It's not often that you get a market like November. As a matter of fact, it's extraordinarily rare that you get a market like November that basically just goes straight up and up and up and more up. You don't really get that very often. Usually, when markets move up, they trend. They create patterns of higher highs and higher lows, which is after the initial straight up in November. That's what we've had. We had this quick dip in the beginning of December that got bought up. Then we had a higher low that we successfully called out in the beginning of January. That got bought up, another quick higher low in mid-January. That's how markets work. Pivot points, right? And again, those pullbacks within uptrends are oftentimes, I think, the best opportunities to be able to make good money, big picture in the market. And I've been saying this every day. We as a team pretty much perfectly called out year lows, and we pretty much perfectly called out the November 17th low in every index. As a matter of fact, with the Qs and a lot of the FANG names, we literally called out the January 17th low to the 5-minute bar. And that sets you up for swing positions that you could still have in the money up here at 430, and that's great, but I want the next opportunity. And when every morning I'm waking up and I'm seeing a SPY or a QQQ that's extended by, $5 to $10, that's not setting me up for that next potential higher low. So very obviously, this market is in an uptrend for the SPYs and the Qs. The technicals look super bullish here, but that doesn't mean that when you get super extended, you can't have pullbacks. And as a matter of fact, whether it's this most recent uptrend that we've dealt with here in November, December, January, or it was the uptrend that we were dealing with back in May, June, July, a lot of the times my best P&L personally came from recognizing, okay, I remember this specifically back here on like June 16th. Okay, we're $10 plus extended in the SPYs and the Qs, so I'm going to piece out of the longs that I still have on from the May breakout, and I'm also going to piece into shorts because of that degree of extension. And then when we pull back, I'm doing the opposite. I'm piecing out of the shorts as they price correct this market back down, booking profit in that, reloading into those longs to set myself up for the next kind of wave higher in the trend. And it just seems to me that technically, after yesterday, we were finally set up to get that pullback. And then the question is, well, does this pullback lead to a higher low that becomes a really good buying opportunity or not? And then all of a sudden, just as that's my thought process, coming into this morning's session, the 830 number comes out that's so solid. TLT's moving higher, IWM's moving higher, SPY's move higher, Q's move higher, where I'm saying to myself, these technicals are telling me we should be getting a pullback, but this number is so strong, and I remember like the IWM in particular just ripped higher. It really looked like we got up to about 198. It really looked like we were going to make another go at that 198.50, and then it just didn't happen. And like I'm saying, I think that what happened was they just kind of outweighed each other. You had the kind of bearish, very short-term technicals that are signaling a pullback, like equal weighting, if you will, the news that kind of came out at 8:30, which was helping to give this market a boost. So now we'll see what happens. Inside day is not a bad thing. An inside day for the IWM here is not a bad thing at all. Yesterday's trading session was a negative Maribozu. Those types of candles typically will signal that you need to pull back a little bit further, but we know that one of the main ways in which a negative Maribozu, and this applies obviously the opposite way also, but one of the ways in which a negative or red Maribozu candle can get negated is through an inside and up. So tomorrow we have PCE in the morning. If things are okay, and obviously we keep having these fundamental economic events that can just turn the technicals on a dime, but if things end up being okay tomorrow, then you could be looking at, after 3 days of rest, so it's no longer any real extension from this big move we had from 188 to 198, an inside and up, especially if TLT is moving higher, that could then set you up for a break of that 198.50 for continuation. At the same time, we'll have the SPYs, if they open flat tomorrow, let's just say, finally coming kind of out of that no man's land and into an area where they could really extend again. I would prefer if we had more of a time correction, honestly, or more of a price correction, because I think that would create the better trading setup. But we had a fundamental event this morning positively impact the market, so that it didn't want to price correct as much. If we get another decent event tomorrow, which is certainly an if, then you're also set up for inside and up continuation after a rest consolidation day. So SPYs are looking solid, and Q's here a little bit weaker today, and that's just fine. And maybe Intel weakens them out a little bit more tomorrow morning, because that Intel report is very much not good, though the Qs are not overly impacted, I don't think, by Intel. But maybe that begins to set us up as well. So obviously we'll see what happens tomorrow morning with the PCE. Tends to not be as market moving of an event as the CPI, even though the Fed likes to say it's their preferred gauge of inflation, which I had honestly never heard of that until like 2 years ago. So we'll see. And then overall, at the end of the day, it was an inside day. And from a trading perspective, going back to the small time frame, the beginning of the day, I was certainly a little bit excited, because it's like, all right, we're gapping up pretty big. This news is good. I know that, like for the IWM as an example, you have a negative Maribozu yesterday, having a positive candle today that totally overwhelms yesterday's candle and gets above yesterday's high is a very rare circumstance. But if it was ever going to happen, it could happen today off of those numbers. So I was a little bit excited this morning. I thought there was a chance maybe we could defy these short-term bearish technicals and actually give continuation. But like always, what's the first thing I want to see? I want to see how the market handles the small time frame extension from a larger gap. And it handled it just fine. SPY is more or less time price correcting for 15 minutes here. ADMA catches up, and the next thing you know, we're breaking higher. But the SPYs were actually trading best in a lot of ways, which is a little bit of a conundrum. The Qs price corrected much deeper before creating a 10 a.m. pivot. And then, okay, fine, they were able to make new highs also, so not the end of the world, though this pivot was a little bit deep. The IWM was a problem to me off the open. It seemed to me pretty quickly that any thesis I had that lower probability technical situation of today immediately fully negating yesterday's candle and getting above yesterday's high, it seemed like that was off the table by 9:45. Technically, there's nothing too wrong with this. Market's extended from the gap, pulls into the equilibrium area, creates a pivot. Technically, there's nothing wrong with that. It could break new highs. It's just the way that we technically corrected the extension from the gap. It's not ideal. This like heavier, more momentum, profit-taking style selling into the gap. Usually, this deep of a pullback, it's tricky to then make that new high. Not impossible, but it's not what you want to see. What you want to see here is at the open, the bulls and bears kind of weighing each other out. So you get primarily sideways action, or if you do pull back and you break the low of the first 5-minute bar, that's not the end of the world, but you want it to be like a little bit more kind of grindy than this, to show that there are buyers present, to show that there is some sort of equilibrium between buyers and sellers that's being battled. Because when you have that type of equilibrium in an up market like this of buyers and sellers, what eventually typically happens is once equilibrium actually catches up, that brings in even more buyers. At the same time, the sellers are exhausted, and then you can get that continuation. So what you want to see here is a bull flag in the first half hour of the day where the flagpole itself is the gap. Or again, maybe a grind down for 30 minutes until 10 a.m., ADMA catches up, and then you're getting the pivot. The way that we sold here, and I was talking it out in real time with you guys, not the end of the world. Can you get a pivot off the ADMA in an index that's volatile like the IWM that pulls back big like this and then bounces, makes a higher low, and then breaks out of this wedge to the upside, makes new highs? You definitely can. It's just more difficult, and lower probability. So we tried, and as a matter of fact, we called out these pivots really well. We called out this IWM pivot. We called out the SPY pivot perfectly. The Q pivot we did not call out perfectly. I called out this QQQ pivot at the same time. I called out the SPY pivot. The Q one failed. The SPY one worked. The IWM one worked. Not the end of the world. You get in this balance. I'm watching this super closely here in the beginning of the day, watching this wedge build out, and I need this wedge to break to the upside. Once we had this inside 5 and down, this wedge breaks down. This bar here for me at 10:30 is kind of when I threw in the towel on the trading session, to be totally honest. I was like, okay, this just isn't the right price action. Maybe you get a roundup in the afternoon because we get that so often with the 0 DTEs. But anything that I'm looking for from a more momentum continuation, or if I think that we're going to go after yesterday's high in 198.50 today, that was off the table when this wedge broke down. It became lower probability based on the way that we sold here early, and then it was totally off the table once this wedge hit. So once this wedge broke down, you guys probably almost could have heard it in my voice because I was a little bit disappointed. I felt like there was a chance that maybe with those economic numbers that the lower probability, big picture technical situation of us actually moving higher today could work. And then it was just off the table. So I was like, okay, I'm done for the day, which never means that I'm done. I'm still trading very actively and manage my positions all day. I mean, just look at what I did with my TQQ executions today. But as far as really getting that upside break and extension and move, it was off the table by that point. So I think that kind of covers everything from the big picture. As far as the individual stocks that were out there, I just entirely focused on kind of position management. I have a lot on right now, a little bit less actually as of the close. But overnight last night and throughout the trading session today, between the size of my TQQ short that I have on plus the 15 longs that I have on, I got a lot of positions on right now, so I'm like very hesitant to do any significant new positions or new adding. I like how my portfolio is positioned. I don't really need necessarily more or less. I just need to trade what I have. So I didn't really go after any of the stuff that we kind of talked about in the morning meeting. But IBM today, I mean, holy cow, that opening move in this thing was just phenomenal. The report was phenomenal, and then fine, it rolled over a little bit in the afternoon. Not a big deal. There's a lot of extension here that's going to take at least a week for this extension, unless it sells all the way down because the market's failing or something. It's probably going to take at least a week for this extension IWM to kind of get satisfied. We talked about looking for continuation in the airlines today. We talked about buying American Airlines for momentum through or versus 1460, and then maybe a slightly bigger picture versus 1440 is what we specifically talked about in the morning meeting. That trade worked great. It sounded like a bunch of you guys were in either American directly or maybe a couple of the other airlines. So very nice job for the people that were in that. That was a really good one. Macy's gave a little bit of upside follow through in the beginning of the day. This is one of the ones that we were looking at over on the takeover chatter, but at the end of the day didn't really turn into too much. So overall, it was a good trading session. I had a really good trading session. I managed my positions well. Like I said, I'm happy with how I'm positioned, and a lot of the growth names, the IWM held in pretty well. Some of the growth names I'm involved in traded pretty well. At the same time, I was able to trade the Qs to the short side very successfully today. So it was a good day for me. It sounded like it was a successful day for a bunch of you guys. But the midday price action, once we broke that IWM wedge at 10:30, it was just a signal that less is really going to be more. And I was saying it even at like 10 a.m. this morning. I won't be surprised if we get inside days across the board. And for 2 of the 3 indices, that turned out to be factual. So that's all I got for you guys today. I am happy, like always, to answer any questions. So starting with the VTF, not seeing any questions in the VTF. And over in YouTube, we got lots of stuff in YouTube. I'm loving how the YouTube crew here is following along every day in real time and getting good questions in that we can all focus on. So keep that up. From Gabriel, do you think that the IWM could tomorrow go above the 198 to 198.50 level? Yeah, that's what we were just talking about, right? Yes, I do. I think that we could be set up for I think that if the PCE turns out to be supportive for markets and that the TLT gets a bounce, that's the if part of the equation, then you're going to get the inside and up, and you're going to get the break of 198.50 tomorrow. That's what I'm looking for. But it's definitely an if, because I got no idea what's going to happen tomorrow morning. From Kevin, same as yesterday, we hit that QQQ EMA at 952, but we overshot. Yep, that's what I was also just looking at on the 5-minute charts with everybody. The IWM and SPY pivots we called out perfect, but the QQQ one we didn't, and it overshot. 10 a.m. SPY shoots the market up. Yep, for sure. From Gabriel, do you like home builders for tomorrow? I don't really trade the home builders very much. I've always found them to be very tricky to trade, to be totally honest with you. This PHM has a really nice looking bull flag. XHB looks okay. The DHI got hit on its earnings report, but it didn't really affect the home builder ETF as a whole. So the other home builder charts are still looking really good, even though DHI failed out. Yeah, they don't look bad. I just, being totally honest with you, I have always really had trouble trading the home builders. I've never felt that they trade technically clean, and I feel like whenever I'm taking good technical trades in them, they don't trade properly. So I pay attention to them because they're important, but I don't really go after them. But yeah, those charts look solid. Also, what do I think about a firm? Pretty weak. This thing was pretty weak today, which I don't love. It's an inside day, but I don't love the weakness. For a firm, again, I think if the PCE is conducive to TLT bouncing, then I think that all these names go. But that's an if. This type of stock is a stock that I really only like to trade for momentum. Affirm, Upstart. I like to buy them high to sell them higher. So if it's breaking above the inside day, if the volume is confirming, then I would go for it. Otherwise, definitely not something I want to buy versus a support level or buy on the way down. PHM is on January 30th, the report. Okay, so it's coming up quick. From Kevin G in YouTube. As you watch the IWM Inspire, are you comparing them with earnings companies? Like Company X earnings has major holdings in the IWM, thus trade more of the IWM. Yes, but not with the IWM. The IWM doesn't really, from my knowledge, have any stocks that, like, there are a very few stocks that overwhelm the Qs as a percentage of the QQQ itself, where it's like, if you were trading the Qs on the day after Apple reports, then you better well be watching Apple as you're trading the Qs. But with like IWM names, not really. I kind of more do it like on a sector level. So like, if I'm looking at the IWM or I'm trading the IWM, I'm looking at what biotech is doing. I'm looking at what energy is doing. I'm looking at what financials are doing, but really particularly the KRE. I'm looking at what growth is doing. I'm looking at more sectors that are giving me an idea of mid cap and small cap that can affect the IWM, and not really individual stocks. But that's different if it's the Qs, especially if a major QQQ company had an earnings report. Thanks for the question, Kevin. Yeah, QQQ was obviously affected by Tesla, which is one of the major companies today, but Tesla affects the Qs because of its percentage in the Qs. I don't think that Tesla affects every other stock that's in the Qs that also affects the Qs, if that makes sense. So for example, at the beginning of earnings season, like whichever the first in the major Mag 7 stocks is that reports, let's just say it's Google. If Google has a really good or really bad report, I bet you that report, obviously it affects the Qs because it's a big percentage of the Qs, but it also will affect Microsoft. It also will affect Amazon. To some degree, it might affect Apple. It probably will affect Nvidia and AMD to some degree. So you kind of have like a compounding effect where not only does Google affect the Qs because it's such a large percentage of the Qs, but it affects all of these other companies that are also major weighted stocks that also further affect the Qs. It's almost like compounding. Whereas Tesla, I don't think that Google or Apple or Nvidia or any of these companies, maybe Nvidia like a very small amount if Tesla's buying their chips from them, but I don't think that any of these other companies give a damn what's going on at Tesla or what Elon Musk is doing, to be totally honest. And the effect that Tesla has on the Qs is the degree to which it is a percentage of the Qs, if that makes sense. Appreciate the questions. Back over into the VTF. Are you expecting a pullback in energy, or will it keep going? From Jerry. So I said it. I've said for a while I really like the energy trade, right? Just to recap real quick, and I've said it every day. I thought that I think I even said it in that afternoon meeting. Definitely probably said it the next morning. I thought that the low on January 18th was some sort of like capitulation low, especially if you look at the small time frames for Chevron and for the XLE names specifically, and then we could get a bounce to at least equilibrium off of it. And then I want to see if we can get above 81, because if we can get above 81, it can have some staying power. That's exactly what has happened. Yet, coming into today's trading session, in the morning meeting today, I said, hey, I still really like these energy stocks, but if you're not already in them, I don't think that you have any business buying XLE at 82. We called out a capitulation bottom below 80 in XLE. Now it's working its way higher. It's in the moving averages, and you're going to chase $82 on like a day 5 up. I don't like that long. Tomorrow, I'll say the exact same thing. I still think that XLE can move higher. I still think that it can be retesting this 86 major resistance area, but I don't think that anybody has any business buying XLE and chasing into $84 tomorrow. If you're not already in it, you need a new setup to occur. So to directly answer your question, am I expecting that it's going to pull back or that it's going to keep going? At this point, I don't know. And it almost doesn't matter to me, at least. If it wants to continue to have upside momentum and not let anybody in, I'm totally fine with that because I'm already long. At the same time, it would not be unhealthy at all for XLE to move sideways for a few days or pull back a little bit, a percentage of this, $4 or $5 move that it's given off of lows, and then give a setup. That setup could be a way for people who are not already involved to potentially get involved, or people who are involved to add. So I don't know, if you're asking me a loaded question because you already have stock or because you want to get stock. But I would say if you already have stock, you're looking good. It could very easily give a pullback here, but that would be fine. If it gives continued momentum, you're in a good position because you're already in. But I would not be either taking a new purchase here or doing any adding here now. You have to have it on already or wait for it to create a new setup. So, appreciate the question, Jerry C. Anybody else? Going once. Going twice. All right, a little bit of a shorter afternoon meeting today. But it looks like we got through all the questions on YouTube and in the VTF. If you're on YouTube, give me a thumbs up. If you're not on YouTube, sign into YouTube and give me a thumbs up. Have a great night, everybody. See you tomorrow.